But for anybody who is new to our events or who isn't familiar with Jim's credentials, I want to be able to assure you that Jim is an excellent resource to answer your questions on all things retirement, tax, and estate planning by sharing just a few highlights of his professional biography. He has practical experience. Jim and our legal team have drafted nearly 3,000 wills and trusts. Our accounting firm prepares 760 tax returns every year, and in conjunction with our money management partners, our RIA oversees over $800 million in assets under management. He's a nationally recognized IRA, Roth IRA, and 401k expert whose tax and estate planning strategies have been endorsed by the Wall Street Journal 36 times. He's been quoted in Newsweek, Forbes, Reader's Digest, Bottom Line, and Kiplinger's, just to name a few. He's a paid contributor to Forbes.com, and his peer-reviewed articles have appeared in Trust and Estates magazine, The Tax Advisor, and the Journal of Retirement Planning. Now, the other thing that I know about Jim from years of experience in our in-person workshops and our virtual events is that he loves to answer audience questions. So I don't want to take up any more time during which we could be doing exactly that. So Jim, let's get started with the first question of submitted in advance of the webinar.
Great, let's do it, Erica.
All right, great. So this is a great question. And I love when we get pre-submitted questions before the webinar because a lot of them are super thoughtful. So this is from Bill in Chatham, New Jersey. And it's a question about Roth IRA conversions. And he asks, one piece of advice from another financial planner was, don't do anything with everything. Does that advice apply to Roth conversions? How far should I go with Roth conversions? All the way to 100% of the traditional IRAs? Is there some advantage to tax diversification of accounts, having some tax-free Roth and some tax-deferred traditional IRA? If there is some benefit to tax diversification, how would you quantify that benefit?
Well, again, this is one of those attorney answers, it depends. But why don't I just talk about some of the basic concepts? Obviously, in investments, diversification is very important to defend from the downside, and it makes a lot of sense, even though potentially in hindsight, it would have been better if you were all one way or the other. In general, it probably does make sense to have diversification between Roth IRA dollars, after-tax dollars, and IRA dollars. And I would say that that is the case for probably maybe 80 to 90% of our clients. But it isn't because I just say, oh yeah, diversification is good. You know, you ought to have some of each, which if you only went that far and you had to cut me off right now, I would say yes, diversification of each type of account would be good. That said, the real answer is it depends on your particular situation. There are a bunch of people that we have over time, occasionally in one shop, but much more often over time, where we have converted everything to a Roth. These are more typically people who will always be in a high tax bracket. One of the problems, and I've actually had complaints. Oh, gee, Jim, when we pay you to run the numbers, and after all your analysis, it looks like we're not going to have all our Roth conversion accomplished before we die. We're going to die with some traditional IRA. That's not what I wanted. And my answer to that was, well, if we did what the client wanted and came up with a plan that converted everything, what would happen is he would convert at too high of an income tax level. Then he wouldn't have any minimum required distribution, and then he would end up converting at a high rate to save taxes at a low rate. Well, that didn't make sense. So even though his gut instinct was he wanted to convert everything, the better answer was to make strategic and timely conversions where he ended up with after-tax, IRA, and Roth. So in general, diversification is good. On the other hand, the right answer is running the numbers and looking at each particular situation. Another example is, let's say for discussion's sake, that you want to name a certain amount of money for a charity. Well, in that case, and by the way, this is where I'm going to say somewhere between 95 and 98% of the estate attorneys get this wrong. They will typically name a charity. So let's say, for example, they want to leave $100,000 to the XYZ charity. You will see in their will or their revocable trust, I leave $100,000. After my wife and I die, I leave $100,000 to the XYZ charity, which means that the charity is slated to get $100,000 of a after-tax account. Or worse, it could be the beneficiary designation of a Roth IRA, which is just horrendous. Or better is the beneficiary for $100,000 in a traditional IRA. So let's even say somebody was in a really high tax bracket, and your gut instinct would be to convert everything, but they want to leave $100,000 to charity. Well, then I would carve out $100,000 or an amount that would grow to $100,000, not convert it, have that money go to the charity, and maybe convert everything else. Long-winded answer to the question, but it really does depend. And by the way, that last little strategy that I slipped in, that's called Who Gets What, and we have saved people and charities a ton of money with just that one little strategy. And that is something that is practically hardly any estate attorneys get this right. And when I tell that to people, and even smart IRA owners, and I hate to say it, me before I even got on this bandwagon, it just makes so much sense. So be smart about this. Don't just go by general rules of thumb. But if you have to, diversification is good. The best answer is what is right for your particular situation. Okay, hope that helps.
Awesome. Thanks, Jim. So we have another question that was submitted by a prospective client. And now this is one of the more complex ones that I wanted to save for this session, just because it has a lot of specifics. I do remember that in our last session, someone said that they have the exact same question as this very sort of detailed, specific scenario. So this is actually answering two people's questions somehow. All right. Exactly. So prospective client asks, what is the maximum tax bracket you would suggest going to when doing a Roth conversion? I have very large standard IRAs, 4,500,000, and do not need income from the required minimum distributions. I am 77 and my wife is 71. We are at the high end of the 24% tax bracket and have sufficient assets outside of the IRAs to live on. Last year's RMD was over $213,000. With tax rates probably going up and possibly restrictions on Roth conversions, would you recommend doing it all this year and incurring a tax bill of over $1.6 million? Is there a sweet spot for doing some, if not all? Our two children will inherit the funds and they're already successful financially, so they would probably put them into the highest tax bracket as well. Thanks.
Wait, quick clarification on the question. At some point, I thought you said there's a balance of 500,000, but if the minimum required distribution is
4,500,000 is the balance of the IRA.
Okay,
yeah,
all right,
I apologize. I'm staring at all of the numbers right there. It's much harder when you're just hearing me muddle them. Sorry.
Right, that's fine. I just wanted to clarify. All right, so I'm gonna rephrase the question because I'm an attorney and I'll take any question I get and answer any other question. So I'm going to rephrase that a little bit, make it a little bit easier to understand. Older folks that don't need the money have an extra $4.5 million in an IRA. Their minimum required distributions already $200,000. They're close to the top of the 24% bracket. How much should they convert? Does it make sense to convert everything? And I'll start with my answer. It depends. That said, what I would be thinking about for people like this, and I'm going to assume that I'm not going to be able to change their spending, or that they have, or I'll just believe the question, which is they have sufficient funds from outside their IRA to pay for all their needs for the rest of both of their lives. So if you think about the big picture, what this really is an estate planning question. I have $4.5 million in an IRA. If I don't do anything and I die tomorrow, their kids are going to have to pay income tax on $4.5 million in an IRA within 10 years of our life. Let's say that the money doubles in 10 years. The kids are looking at tax on $9 million, pushing them into the highest bracket. So we're talking about a tax of $3 or $4 million if they do nothing, okay? And there could very likely be estate tax implications because particularly with the potential of the estate brackets going down, they might end up with taxable for income tax purposes and taxable for estate tax purposes. So it's basically the status quo of doing nothing is really bad. So then you have to have a discussion, well, what are your goals? Do you want to leave, are your goals to have the most money for your family and the most money for your family for the rest of their lives? Well, if that's the goal, then going into, and unfortunately, it'd be easier if they were in the 22% bracket because you can say, well, look at 24%. Well, now we might want to go significantly higher. And the other thing that we might want to do, as I mentioned earlier, we might want to not just do Roth conversions, we might want to take some money out of the IRA and gift it, and preferably have that gift be invested in something that grows income tax free, like the kids' Roth IRA or the grandkids' Roth IRA or the Roth 401k or Roth 403b or life insurance or a 529 plan. So these are some of the things that come to mind. The other thing is, do you have the stomach to write a check for $1.5 million, which might be the tax cost of converting everything? Maybe not. Maybe some people will say that, and then when you actually do the analysis, like, oh God, I can't stand it. Maybe we do a series to keep them in a lower bracket. But this is what I would say. We're looking at a really big tax increase starting in the year 2026, even if nobody passes anything. The status quo for these people with $4.5 million in an IRA, and they probably have a decent size estate on top of that, and they're not big spenders, the status quo is actually tax misery, tax Armageddon. So I'm a little bit desperate in this situation. And if we were running numbers, I wouldn't start with, let's see what it's like if we convert $100,000. I would be thinking, well, what if we convert $1 million? What if we withdraw $1 million from the IRA, pay $400,000 in taxes, and then gift the remaining $600,000? I would be thinking big in this type of situation. And frankly, I think one of my jobs is to get people, even if it's outside their comfort level, to at least present that. Theoretically, you're supposed to sell what people want. And I try to do that, right? Cut taxes, save estate, tax-free, blah, 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 and do what, looking for the right fit. But then after somebody agrees to be a client, you don't necessarily do just what they want. You also, in my opinion, you at least present what you think they need. It sounds to me like even if the guy's thinking, well, should I do 100,000? The question even said, should I do it all? But what he probably needs is looking at a bunch of alternatives including some ones that might off the top of your head seem too aggressive. I can't imagine that converting everything in 1 year is going to make sense because that's going to push them into a huge bracket. But let's say that we have until 2026, we might be looking at some pretty big conversions. The other thing is, one of the questions before is, what about the state? Is he in California now? His kids live in Pennsylvania, in which case it might not be so wonderful, or is he in Pennsylvania and his kids are in California, which would make a lot more sense to go higher. So again, long answer to the question, but it depends. But hopefully some of the things that I have said along the way could be helpful to you also.